What's going on, everybody? Jeff here. Welcome back to the channel. Midday Friday, market is consolidating. We have about 3 hours left until close. Figured I'd jump on here and make a video after yesterday's big move. A lot of news happening. I want to talk about not only what other countries have reported when it comes to CPI, but also talking about the big change in calculation, how investors are starting to digest where the expectations lie. Is it going to come in hot? Why is it going to come in hot? Okay, now just to digress a little bit, we have to take a closer look at these numbers. For example, all right, when I think it was about last week's non-farm payrolls came in, it was much higher than expectations, and the market didn't really sell off as it would. Normally, when you had a massive jobs, number come through, it would show that the Federal Reserve still needs to do a lot of work in order to tighten down the labor market. And therefore, the stock market and equity markets would pull back a little bit. However, that didn't happen because you had two things. One, a lot of seasonality, seasonal employment, as well as it's the change of the year and the calculation gets jumbled up a little bit. I covered that in one of my previous videos. But now you have this CPI calculation changing. We're going to dive into that a little bit and take a look at how investors are starting to price this in and also give an overview of the chart. So let's get right into it. First off, let's cover the CPI changes. So first of all, December 2022 CPI data is being calculated per the existing model. The existing model, what they would do is take the previous 2 years combined. However, the January CPI is going to go off that new model. Okay, it was slated for February 10th, Friday. Obviously, it's coming out on the 14th on Tuesday morning at 8:30. Let's talk a little bit of the reasoning why. So when it comes from the Bureau of Labor and Statistics, they're looking to try to improve the accuracy and the usefulness of the CPI. Now, there is a lot of speculation that says, listen, the Federal Reserve, because they do have some of this information, sent to them a little bit earlier. They are privy to that, knowledge. It's trying to say, listen, they know CPI is going to come in a little bit hotter, going to come in a little bit cooler, where they want to position the market. The labor market is still tight. Unemployment even hit a lower low of that 3.4%. And this could be a little bit of manipulation, trying to basically steer things to where they want them to go. Now, inflation coming down like this, okay, with the labor market staying very strong, unemployment, low, you've got, your average wages, year over year are going up more and more. Like I said, inflation might cool down just a little bit, but there's a high chance that it's going to spike again, just like it did 50 years ago. You can go take a look at history and see how it repeats itself and actually take a look at why that happened. And they're trying to prevent that. And they're starting to see some data that is potentially leading to that, which is why you have your equity markets, pricing in that, we're going to, hit our max for rates and they're going to start to lower them and so forth. When you have Jerome Powell saying, listen, we're not going to lower rates. Okay. We're going to lower rates when we need to lower rates, meaning when there is a little bit of strain on the system. Okay, when the economy is showing signs of struggling. If the economy is making it through, which from a lot of the numbers, strong employment, you have wages, going up, the economy is making it through this inflation crisis as of right now. Okay, and obviously some of that information, is at its infancy stage, but it is making it through as of right now. Jerome Powell is not going to cut rates until there is some strain on the system. Okay, so this is going to be the first CPI that is, weighted on the new model, okay, calculated by the new model. Now, we do have multiple countries, including China, reporting higher inflation. And some of these other countries talk about, the impact on the global economy, all right, and the supply chain, and how really, if all these other countries are reporting higher inflation, this might carry over to the US. Now, you might take a look at some commodities such as eggs and orange juice. I saw that posted on Twitter, eggs and orange juice, but as well as energy, usage, gasoline, and so forth, that it might boost up that inflation numbers to be a little bit higher. It is important to know that the housing market, which makes up the largest section of CPI, has started to cool a little bit on a national average. Okay, so it'll be interesting to see exactly where those numbers come in. But like I said, this has to be taken with a grain of salt because it is the first adjustment. But let's take a look at exactly how the markets are pricing this. Okay, so you're reacting to this, I should say. You saw yesterday, it was, we broke that support right at that opening range, and we just completely sold off all the way to the bottom of the range. Now, I've been talking about this range for quite some time. Okay, this 408 to 416, we kind of had that little fake breakout to the upside, but 408 to 416, you can see here it was resistance. We broke back into that. It looked like we actually rejected it this morning and are kind of just consolidating right beneath that. Now, you do have 404, 400, a lot of other critical levels, SPX 4000, the futures market 4100, and below that is 4000, a lot of critical levels to the downside. But as of right now, they're starting to make a little bit of adjustment. Now, if you remember, based on history, what happens during these CPI releases, and I've said this to everybody inside the group, there's been two common situations. Okay, one is where we see that that just really long consolidation, that ping pong back and forth, very low volume, no direction, and everybody is awaiting the CPI release. Bulls aren't taking action, bears aren't taking action, and you're just awaiting those numbers. We get the consolidation, whether it's to the upside or the downside, that reacts very strong. The other, which you've seen a few times, is we grind higher into CPI, okay? And the expectations are for a pretty good size beat. It actually has come in line once and it's actually missed twice, and therefore we have had a lot of room to move to the downside. Okay, you see those low volume grinds to the upside are really not built on steady, solid buyers looking to continue to bid up the market. They're also shorts tripping over themselves trying to close those positions. Remember that in the future. If you see that low volume grind, it is also shorts covering their positions, which obviously would push the market higher a little bit. Wouldn't really say a short squeeze, just shorts closing their position. So keep that in mind. We are setting up for a little bit of a doji day, and obviously I know, guys, I'm making this video early. All right, so for all you guys in the comments that are going to put down and be like, oh my God, it changed so much. Well, there's still 3 hours left in the day, so a lot can change. But as of right now, we are setting up for a little bit of a doji setup, which is an indecision candle right around that 408 area. Like I said, that is the bottom of the range. If you take that out and you look at the weekly chart, where we stand, you can see right here going all the way back, this massive consolidation, this breakout to the upside, big wicks on the bottom for a nice trend all the way up. This is going back all the way towards early to middle of 2021. That 416 was solid support. Came back here, we retested it, acted as support again, little fake breakout to the upside, only to be completely crushed to the downside, hitting the new lows of that 350. And here we are starting to reject off of it. Weekly candle looking a little bearish as of right now. I wouldn't say it's the ugliest candle that we've seen. Okay, you can clearly see there some, much heavier, red candles, bloody candles that have pulled the market down. But it also does make sense too, and I've said this to in probably one of my recent videos, you've got, you look at my list over here to the left, and you look at 2 of these large caps that have massive runs. You look at Tesla, which is down 6% as of today. Okay, going back just in the 30-day chart from 100 all the way up to 214. Profit taking, especially ahead of a big event like we have, is very, very normal. Same thing with Nvidia around that 140 all the way up to 230. Same thing. Massive profit taking. It's a huge, bullish uptrend. I really wouldn't say either of these tickers have officially rolled over as of right now. On a larger time frame, it's really just a pullback. Once you start breaking some of these lows, you can see Nvidia has that on that 205, 206 level. Once it really starts to break that, you've got 200 psych, then you can start looking in a potentially a rollover and taking a longer short position. Same thing with Tesla. I really wouldn't say around that until that 182 to 184 area. You do have that EMA support, that 200 EMA, which is sitting at 182.50 on the hourly chart. So like I said, I really wouldn't say that's a complete rollover. Some critical levels on QQQ, when you take a look at the tech, it's at 300. They're fighting to stay above that. You are seeing a little bit of that 200 EMA that we have ridden to the upside multiple times, 1, 2, 3 times, and we started to break through that. Is it going to act as resistance and get that rollover to continue to move to the downside? Remains to be unseen. But all in all, just a bigger picture, understand what is happening, where investors are starting to price in this CPI calculation, okay, as well as where we are standing from an overall, larger time frame standpoint. You've got that 408 to that 416. There was a bit of a range once we had the FOMC breakout. 408 was that big breakout, resistance that we had broken through. Once, I think it was the 27th of January, you can see where my marker is right here. We rejected off of it. Came back up, we consolidated right on that 404, which is where we have held right now. That's where the FOMC breakout had began, around that 404, and just continued to move us all the way up to 418. So you're going to look for that 408 to continue to hold resistance if you want to see some more downside action. Like I said, I already listed the levels beneath. So just keep that in mind, guys. I hope that gives you a bigger picture. That's it for this video. I'll see you in the next one.